Thursday, December 18th, 1:40 p.m. New York time. Welcome back, investors, to Winning Wall Street's Money. Going to discuss the futures, the broad market futures. Already halfway through the month, last quarter of the year, last month of the year. Look at multiple time frames. First, we'll look at the monthly time frame. We get a good insight here to determine if we're in a trend or a consolidation, if we're bullish or bearish, and maybe even some setups. S&P 500 futures, symbol /ES, monthly. Got it? Self-explanatory. Each one would be labeled. So the yellow horizontal line is the high of the year. That was not this month, not last month. Nope, 3 months ago. The current month, look at that small trading range. Trading range, the top to the bottom. That's all the price activity. So again, we're already halfway through the month. Look how small the trading range is compared to these other candles. Much smaller trading range. It's forming a dodgy candle. Dodgy candle means indecision, potential reversal, potential halfway point. But the basic thing is it means indecision. Yep. So a prior week, look at that little body up there. Big wick, but little body. We may have distribution going here, meaning smart money selling, dumb money buying to hold it up there. And then when there's no more dummies to be buying it, it tanks. Meanwhile, smart money sold and made profits. And maybe some of them went in to go bearish, looking for price opportunity to buy short, make money on the downside. Well, if you're a trader that's only looking to trade bullish, here's a sweet spot. Here's another sweet spot. Here's another sweet spot. Just sit on hands and wait for it to come back there. If it does, for a potential bullish entry. Who might do that? Well, people that are investing long-term, people that are doing dollar cost average, adding periodically from payroll into their investment portfolio. This is the 10-year U.S. Treasury yield. It's correlated with the 30-year mortgage. When this goes higher, the 30-year mortgage goes higher. And this is this year. Look at this tight trading range. This is the low of the year. This is the high of the year. We are still inside the range of last year and 2023. Wow, we haven't gone that far. The Fed has cut rates multiple times this year. We still have not taken out the lows of last year yet. So that's another reason. It costs a lot for investing in real estate because the yields, interest rates are high. The prices are high as well too for the homes, businesses. So last month we made an inside candle and we broke above it. Higher high, higher low. So again, yields go higher, interest rates go higher for mortgages. And the US dollar index. Typically, Federal Reserve lowers the interest rates, dollar gets weaker. And that's what's happened. Here's the high of the year. We've been declining in price in a lot of chop here, consolidation. And this month, lower low, lower high. The momentum's down. Dollar is still bearish. We broke that key level, midpoint, that big green candle. Crude oil. Yep. There's the high back in 2022. And past several years, lower highs going down. Made a new low here. We took out the low of last month, that inside candle, and down here. Look how small the trading range is. These small trading ranges. less sellers, more buyers on the dip. And gold, new high for the year, outstanding. Euro took out the high of last month. Natural gas, we did make a new high for the year. Huge sell-off, taking out the low of last month. And here we are now. Consolidation, breakout, consolidation. Opportunities to be looking to buy the dip. Same with oil. And silver, also new high for the year. Huge move up, bullish. Now, Bitcoin, look at that yellow candle, means it didn't take out the higher low of last month. Indecision. Wow, having a terrible year here. Now we'll go to the multiple time frames. Three grids. Left, the daily, 3 months. The middle, weekly, 1 year. And the right, 5 years monthly. Look at again, this is the S&P 500 futures. It's a bullish trend on the monthly. Weekly, it's in a consolidation. Look at weekly, that big wick on the bottom, testing midpoint, that big green candle. Nice, buyer stepped in there. That was a key level. And daily chart. Testing this imbalance area, buyer stepping in again. So if we close above that red candle, that'd be even more bullish. Again, this doesn't close till 5 p.m. today. We may be having the bulls take control, work their way forward into the holiday. Let's go to the next financial instrument. Ten-year yield. Again, I already showed you the month, the far right. Weekly, red, lower high, lower low. Again, staircase pattern, higher high. Consolidation here. Well, on the daily on the far left, again, touching imbalance area, buyer stepping in there. But the trend is down, lower, low, lower, high. This is a key area. Might get a bounce up here. Might continue going higher. Well, again, look at the monthly. Trend is down. Let me remove these. It's not valid anymore. There we go. Might build a case up to go here. So speculators are buying here, anticipating to go higher. On to the next. The US dollar. Yep, already mentioned the monthly on the far right. Look at the weekly, the middle chart. Forming a bullish pin bar in this key demand zone of buyers. Big wick in the bottom. Nice. And the daily chart. Did that bullish pin bar down here. Since then, made some green days. Today, green day. Potential running up to these key levels for looking for bearish opportunities. Yesterday's big wick here was a huge rejection. So that'd be, if you're bearish bias on these higher time frames, be best to not be trading long, sitting on hands. See if the opportunity comes up here to trade bearish. And I shared in the other video, bearish stock ETF versus the dollar you can use. Let's continue on the next. The euro, inverse from the dollar. You can see on the monthly. Weekly, look at that. Again, euro go lower, dollar will go higher. So this looks like on the weekly, might have a retracement coming lower to here, which would be inverse of the dollar. And the far left, the daily chart. Yep, bearish pin bar up there and declining here. Typically, you have dollar strong into the holiday. Makes sense why we have a temporary pump. Let's go into commodities, energy. Crude oil first. Ready monthly, mentioned here. On the weekly chart, we are in a demand zone. Buyers stepping in here. We broke the swing point right here, this blue line. Made a new low for the year. And buyers stepping in here. Key level. Speculation. Buying on the dips. You could do the futures, the options, the stock ETF. I shared that in a prior video. Good opportunities. Look at this on the far left. Yesterday, bullish engulfing candle, big green candle, strong. And today, the red candle came down, test at midpoint right there. Nice opportunities, buying on the dip. One could be buying the stock ETF if you want. Now, this is an imbalance area here. So we'll see if we're going to have a consolidation and then work our way up. Continue on to the next commodity. Natural gas. Showed you already higher on the monthly. The weekly, down here. Key level, big green candle, big impulse move up, midpoint labeled here, and buyers stepping in already here. Nice. Where you can see here on the daily chart, there's a gap here, hasn't been tested yet. So I, being situation aware of this, be more focused on the daily chart, looking for potential reversals. Let's go on to the metals. Gold, like I mentioned on the monthly, high, all-time high. Daily chart, again, this week, new high. Nice. The weekly chart in the middle. And the daily chart. Today, higher high, higher low, forming a bearish pin bar. Well, might be having some distribution here. So dollar goes higher, may see a pullback on gold. Be able opportunity to reload on the dips. And we're taking a silver. There we go, silver. On the monthly, the weekly, strong. And the daily, inside candle. Potential reversal and decision. And we'll take it to that crypto called Bitcoin. Monthly inside candle. Weekly, huge rejection. Red candle, lower low, lower high. Into this Fibonacci level, 0.382, massive rejection. So now that Fibonacci is irrelevant anymore because Bitcoin already showed its hand. It's bearish. Went there, rejected it. Bearish pin bar, follow through on the downside. The daily chart here, staircase pattern, lower low. Oops. Do this a little bit prettier. There we go. Again, today's not done yet, so I'll update that later. So that's current situation. The broad market futures, they all have stock ETFs you could trade. Thank you as always, spending just a little time with me. That's it for the video. Thank you for watching.